Today's podcast episode is sponsored by one of our favorite real estate agents, Victoria Calabro of Century 21 Shoreline Properties. If you're looking for a home, she is the agent to call, 401-639-1637. If you're a small business owner, there's a good chance that at some point in your entrepreneurial journey, you're going to need funding. So today, we thought it would be a great idea to visit the offices of the Rhode Island SBA and meet with our guest, Mark S. Hayward, who is the district director here at the Rhode Island SBA office. So thanks for being on our show today.
It's great to be here. This is probably one of the greatest times because a lot of people say to me, well, why are people looking at the SBA today? And you would be surprised that the number of businesses that actually start in a down economy. So we're great. It's great to have you here.
So I love that note. We actually started our very first business in 2008.
Oh, there you go.
There you go. And here we are, right? 16, 17 years later. And our first loan was an SBA loan. So I thought it was a wonderful opportunity to talk about how we got started, how the SBA helped launch, not only start our business, but grow our business over the last several years. So one of the reasons that I thought it was very appealing was that there were several program options. So there was a little bit of something for everyone. Also, the interest rates were low relatively compared to other styles of funding and financing, and the repayment time seemed a little longer than most. So we want to talk a little bit about that today so our listeners can understand maybe what they need to know about the different types of loans, how they figure out what works best for them, and how they prepare before going to a bank.
Sounds good.
All right. So there are three types of loans that I know of, and then you can elaborate on that.
Sure.
So there's the microloan, there is the 7A loan, and a 504 loan.
Correct.
And then you said there were some subdivisions of that.
Right.
So let's get into what's a 7A loan?
So a 7A loan basically can be used for just about anything. And when we look at the 7A side of the portfolio, it can be up to $5 million. And most people don't need $5 million, but it can be, and I have seen in my time here at SBA, I've seen loans from $1,000 to $5 million. Now, in that, it can be working capital loans, which are loans that you can use for payment of individuals, for meeting just about any other obligation, be it accounts receivable or accounts payable. And it really is probably the most diverse of all of the SBA loans. Now, having said that, you can also use it for hard assets and machinery and equipment.
Yep.
And in that case, you can take that 7A loan out to 25 years. And everybody knows that who has a mortgage or who has bought a home, the longer you take a loan out for, the smaller your payments are. But you're not penalized by prepaying or moving ahead those little icons along the road, because it gives you the opportunity to manage your own assets. Yes. And I just to go back, we also, and we do have, our lending programs are critical to just about everybody, but I'm also going to talk a little bit about our resource programs that we support, that we fund, the SBDC, SCORE, the Women's Center, the Veterans Center. But to come back to the 7A loans, it's really important to understand what you need for your business. And I say this because when I first came to the district office back in the early 1990s, I'll never forget, I had a person come to me and says, I really do need money for my business. I'm doing a little bit of international trade, and I need a 7A loan. And I said, okay, so what do you need? And the response to me was, how much can I get?
Yeah.
That is not, that's not a good response.
Yeah.
Because if you don't know what you need, then the lenders, because SBA is basically an insurance portfolio to the bank. So we're guaranteeing the bank's money to you. So if you don't know what you need, it is a real problem.
So that tells you they don't have a complete business plan.
That is very true. And as I walked through with this particular gentleman, I said, do you have a business plan? And this was one of the conversations that always sticks with you. And he said, oh, yes, I have a business plan. I had John Smith write the business plan for me and do the financial statements. So I just opened up the business plan and I went to a particular page and I asked a question. And he said, I can't answer the question. I said, well, let me tell you how bankers respond to that. They will lend the money to John Smith, but they won't lend it to you because you don't know what your business plan is about.
You need to know your
So,
business.
Erica, having been a business person, you know exactly what you need. You got to know what you need.
Yes.
So on the 7A side, we can do just about anything, but you have to make sure that you understand what your capital needs are, because undercapitalization is a huge
reason why people go out of business.
Is a reason why people go out of business.
Absolutely.
And I just want to say, just because you can cook doesn't mean you can own a restaurant.
Amen.
So, you know, what we try to teach in this whole process is not only what kind of financing you need, but also what you need to get to the point where you can actually go to the bank and ask for that financing, and the bank can come to SBA and say, I have a $250,000 loan. We would like you to guarantee this. So it's a whole process.
Yeah.
And 7A just really gives you the ability to put funds in all different areas. Now, I talked about the $5 million that we can take, or any amount that we can take out 25 years. If it's a working capital loan for $150,000, then that loan probably will be taken out 5 to 7 years, depending upon what the working capital is going to be used for.
That's exactly what I got.
So, right. Yep. So it kind of gives you the ability to understand what your limitations are.
Yeah.
I don't see a lot of working capital loans over $1 million, but we see a lot of them between $50,000 and $250,000 just to get them to that next.
But I love the flexibility, because we were able to use that money to rent space, pay security deposits, buy the equipment, get the staffing, do, you know, everything that we needed from soup to nuts, from, you know, the business cards to the building. You know, we didn't own the building at that time, we rented, but it gave us flexibility to do everything that we needed to do.
So let me change to the 504 program, because the 504 program I affectionately call as the window to Wall Street for small business. And everybody knows that, you know, the larger businesses can go out there and they can borrow at prime or prime plus one. Well, this is essentially the same thing for small business, the 504 program. Because if you have a building that you're looking at for your business. Now remember, 504 is for land and building, machinery and equipment. This is not working capital. So it's completely different than the 7A program. So the 504, $1 million building, the XYZ Bank will go into first position at $500,000. The SBA will come in at a debenture, which, by the way, this month I believe is selling at 6.25, which in this interest rate environment that's going up is not too bad. And then you as a business owner are responsible for 10%. Now, that admittedly, that can move to 20% depending upon if it's a single-use building. And what do I mean by that? So we actually did this. If you know Pods in East Providence, that is a swimming facility where they teach both for high school and for recreation and for young kids and everything. So when that was built with swimming pools. That's a single-use building. So we have to, you know, understand that. So her portion of that 504 loan was 20%. Normally it's 10%.
Sure.
But it can vary. But the bottom line is $1 million building. The bank goes into first position for $500,000. What does that mean? That means that they're going to give you a loan for $500,000. It's a 10-year note with a 20-year amortization, which gives you the ability to stretch that out a little bit. That can be refinanced if you want, but it gives the business owner that ability to challenge themselves to either make that over the 10 years or to stretch it out. The SBA portion is sold on the secondary market. It is, like I said, 6.25%. It's $400,000, and there are prepayment penalties over the first few years. But that it can be a debenture of 25 years. So you're taking $400,000 and stretching it over 25 years. That's a tremendous advantage for a business. And remember, during this whole time, if you expand or you grow or you change, you have that asset that you can sell, which would repay the balances on the loan. So there's really important things that happen.
And
So
right now with rents, it almost makes sense. If you know your industry and you've been in it a while and you're ready to branch out on your own, that's buying real estate just makes sense.
absolutely,
It just makes sense.
you're building equity.
Well, yeah. So the 3 buildings we have, we own 2 and 1 we rent. And we always have this conversation back and forth like, I've approached the owner several times to buy the building. He won't sell it. And I know why. But yeah, so it gives you that flexibility. It gives you, I almost look at it as a way of when you do that, you're building assets instead of liabilities. So having that building, especially once you pay that off, it's an asset in your portfolio for your business, right?
And you raised a good point because on the buildings that you buy, if it's an existing building, you have to occupy 51% of that building. So if you have the ability to rent out 49%, they're also helping you pay your loan.
Pay your mortgage, yeah.
If it's new construction, then it's 66 2/3 that you have to occupy. And we always get the question, Erica, that, listen, well, I want to buy this building and I want to put a store on the first floor and I want to put an office and maybe an apartment on the second floor. And I said, okay, that's fine. What are you using the basement for? Well, I'm using it for storage. So you have to take that basement. If you're using that storage for that business, that's part of the overall calculation. So yes, you can create this small apartment. You can create your office on the other side, and you use all of those numbers as your basis for the particular loan. And I've seen, for your occupancy, and I've seen all kinds of equations. But you, if you have a problem, call me because I'll be happy to figure it out.
All right, there are always solutions.
So the 10% that you as a business owner have to put in, and because you got a 504 loan, is cash or cash equivalents. So if you purchased equipment and you're bringing it to that particular business, that's also eligible under the rule. But it really truly is, the window to Wall Street for small business, because you can become competitive very quickly. And so we tell people, take a look at it because it may be something just for you.
Yeah.
The third program you talked about is microlending. We have 2 specific in microloans. We don't do them directly. We do them through an intermediary. And our 2 intermediaries here in Rhode Island are Community Investment Corporation, which is in Providence. They're originally in Connecticut. They have an office here in Providence. And Southeastern Economic Development, which is SEED, which is out of Taunton. And they just, basically they cover the entire state. It's loans of $50,000 or less.
Okay.
And there are other lenders. In Axion is also been into the state, but they all have like the different niches. So you can go up to Axion will only do up to 10,000, and they're basically very high in the interest rates. Probably right now they're probably in the 20s.
Wow.
And then you look at Seed, which is a little bit more conservative on their microloans. They will go to 50,000, but they will also require a significant amount of collateral to be pledged to that loan, and then their interest rates will vary depending upon what you are pledging for that particular loan. And then we have CIC, which is a little bit they're looking less on the collateral side and maybe a little bit more than Seed on the interest rate. So there are, what I'm trying to say is there are options depending upon what you're looking for. And this year, actually through the end of February, we have done 7 microloans. And 7 from October to February is not a lot of microloans. Well, last year at this point in time, we did 2.
Yeah.
So it's a significant increase. And as we go through the year, and that's why I said, we first started by businesses starting a down economy. This is what you're seeing. People kind of, stepping into the water a little bit, and they may have their toe into it. They're not really sure, but this is what they want to do. And that's why I think we're seeing a significant uptick in the microloans. We're also seeing a very significant uptick in the 504 loans and 7A because despite one of our community development companies said to me the other day, it's amazing to see that people are actually borrowing at these interest rates because it is people taking that chance to fulfill their dreams. Now, you, like me, like everybody else, when I bought my first home, I bought it at 14.5%. If you get to that point where the Fed starts to drop the interest rates, and it becomes advantageous to you, you can refinance it.
Correct.
So there's so many things on the table.
I think, too, during the down economy, it gives you an opportunity to get into transactions that maybe you wouldn't normally be able to do, right? So let's say you are a great cook and there is a pretty well-known restaurant down the road that's already established, already has staff, already has customers, and you have the credit and the money, financing, to go purchase that. Maybe you would not have had that opportunity. So I think that, too, getting a turnkey or something that's already operational that you can bring your skill set is I find happens a lot during the down economies. Or people close to retirement and they're like, I'm done at this point. Those are the opportunities you can get into really quick. So that happened with Chris and I. We opened our first from the ground up, and within 7 weeks, we had another childcare facility say, I want to be done. It was the end of her era, and she said, do you want to buy me out? And I said, absolutely. And that was the one that we purchased the property. It was existing. It was easy. It made great revenue, so it was very easy to bring that to the bank and go, look, here's the last 5 years. We didn't need fake protections. We had real numbers. Here's the last 5 years of this business. I was running that business at one point. And so I think there are a lot of opportunities that happen when this type of economy happens. So
yeah, and the funny thing is you brought up the restaurant. That's a turnkey operation.
Yep.
So one thing that we SBA and the lender is going to look for is to retain that management.
Yep.
To assist you probably through the first year in the transition, because that's really critical, that you have somebody who understands that business and can help you run that business.
Yeah.
It gets back to I can cook.
Yeah.
Therefore, I can
there's
own a restaurant.
There's a lot of pieces to owning a business.
Absolutely. And I think it's really important. And can I give another side story?
You
can.
Okay.
So
it's our show, Mark.
Okay. So interesting, because I had an individual who came in and said, "Oh, listen, I got a great business plan. We're going to put a restaurant in Harrisville," and they showed us the financial statements, and I'm looking, going, do you honestly believe that you're going to put
that kind of
restaurant and get $1.1 million in return? And I said, if you were looking at that restaurant down on Route 2 in Warwick, where you had so much traffic going back and forth, there's a real possibility of that.
Absolutely.
But out in Harrisville, I'm concerned that your numbers may be off, and that we tell people all the time, listen, projections are projections are projections. You just talked about having real sense, real data that you could bring to the bank. And I would just say to people, be realistic.
Yeah.
Understand that there are going to be ups, downs, and other things that you'd have to take into consideration. But there are opportunities. No, there's no question about it.
Yeah. I think, too, the other thing, when you do open a business down a downturn, there's really, I don't want to say there's no way to go up, but usually if you start on a streamlined, very small group, and keep your costs down, because you would have to down on a downturn. Thank you. Couldn't get that out. On a downturn, it helps you have a good budget, because you're forced to. And then when things get better, if you stay like that, you start to make profit.
Yeah, I agree.
Yeah.
And the other thing is, I watch Shark Tank all the time. I think it's a great, you see the innovation of people and what they want to do. And last week they had an individual that came on, was seeking, I think $250,000 for 10% equity in the business, and all the sharks. I'm sitting there going, $2.5 million valuation for this business, maybe a little bit too high, and the questions, particularly from Kevin O'Leary, was, well, you're taking a salary out of this. So, I have to pay myself. And he looks at it and says, normally, as you well know, as a small business owner, those first years are extremely lean years.
So sure were.
You need to, we tell people, don't quit your day job. You need to understand that if you're going to be all in for this particular business, which probably will work, you need to understand that there are options you need to put on the table that will allow the business to propel and exceed and be successful outside of you receiving a
be prepared to work more hours than you ever have.
And Erica, this guy was getting he was taking $100,000 a year, which didn't make sense. So as we sit here and talk about business formation, business development, those are the kind of things that people really need to think about, short and long term.
Yeah.
I know I'm talking too much.
No, you're not talking too much.
I do want to talk a little bit about our 504 companies, CIC, as well as Seed, Bay Colony, even New England Certified. They all have the ability to do what we call 7A Community Advantage. And I know everybody would say, well, what does that mean? When you get a regular 7A loan, the bank is risking their money that I put in there, that you put in there. Yep. So they want to make sure that you have the ability to repay that loan through the cash flow of the business, not the collateral. So they're looking for a credit score anywhere from 700 and up. So let's say you don't have a 700 credit score, but you have a good idea, you have a good concept, you need additional money. We have given permission to CDCs to lend up to $250,000 for those who have credit score impairment but the business is still very valuable, both from a operational standpoint as well as a financial standpoint. So that 7A loan may be where people who have credit impairment go to. So, and all we'd say is reach out to the district office. We know the people who probably would do one of those loans. And so there are always advantages and disadvantages in lending and financing. But if you talk to us, we can help you maneuver through the potholes, as they say, that are on the street. So there are opportunities.
Okay. So let's talk really quickly about the website. So the SBA's website. So are there tools on there? What kind of resources would people find there?
Yeah, there are actually a lot of tools on the website. The district offices are always encouraging more information versus less.
Yeah.
And on the website, we would, there is a great discussion about our programs, a great discussion about our services. There are information about our disaster loan programs, and a lot of people got EIDL, economic injury disaster loans as well. But I think the most valuable is to find out what our resource partners are and what they do and how they're doing things. We are blessed in this state that we have a great partner in the Rhode Island Small Business Development Center. Diane Fonaris is the state director. Manuel Batal is the assistant state director, and they are headquartered at the University of Rhode Island. The SBA gives money to the state of Rhode Island. The state of Rhode Island gives money to the university, and together they have developed a program that is second to none, in my opinion. They really understand what they need to do in order to make people successful. And the reason why I say this is they'll hire consultants for you. They'll help you with your financial statements. They'll help you with your marketing. They'll help you with your outreach. But during the pandemic, Rhode Island is a hospitality state. Let's be very candid. They actually went out and purposefully hired a restaurateur to assist them in helping all the restaurants across the state. Yeah. We partnered with Dale Venturini from the Rhode Island Hospitality Association.
Yep. Industry support.
It just made sense. But it goes to show you how committed Diane and Manuel are to ensuring that they got somebody like Maggie who can understand what restaurants are all about. And I think that's probably why our restaurants really did as well as they did. She, very innovative, having been in the industry, she knew what to do.
Yeah.
So the SBDC, listen, there's no stupid questions. If you want to ask a question, go ask it. They will give you the answer. On the other side of that, we have SCORE.
Great group of people.
Great group of people.
Great group.
It used to be, back when I came, many, many moons, called the Service Corps of Retired Executives.
Correct. Yeah.
Well, there's not a lot of retired executives in there.
Yeah.
There are more SCORE volunteers that are business owners.
I asked Jeff about it the other day. I said,
and it's
do you have to be retired? He said, no.
No. But SCORE really is it's an opportunity for you to access people who are in the industry right now. And they have people from across many industries. Doesn't make any difference. Could be personnel, or could be restaurants, could be, insurance, could be just about anything. And they will be a mentor to you. So you can take that individual, and I know people who've had their same mentors for years.
Yeah.
And
I have one.
You have a mentor?
I have Ed Alves.
Oh, very good.
I love him.
Yes. Very, very good.
I love him. He is just not only just the business support, just a great human being to just have by your side.
Absolutely.
Yeah, he's one of the best.
And they just added 11 more volunteers.
Yeah.
And they're volunteers. They don't get paid. I mean, this is completely volunteer. The satisfaction of them helping an individual who wants to get in business is really what it's all about. And it's really heartwarming to see. And they have men, they have women, they have minorities, they have just about everybody that you possibly. They have a couple of people who speak Spanish if you need Spanish speaking, and it's across the board, and it's really, really.
I think
when I retire, I'll do the Portuguese side of it.
I think too, one of the assets of having people who are not retired in the mix is if you're in an industry that has a lot of changes.
Yep.
Like if you're in technology, right? How and what you needed to know 15 years ago might look different now. Same thing with marketing, right?
Right.
It's very social media heavy. If maybe that wasn't your forte 10 years ago, somebody who's currently in the new platforms, etc., might give you additional guidance, not better guidance, but additional guidance in that way.
For example, you're in childcare. So childcare has a lot of regulations and a lot of regulatory changes that come over a period of time.
Yep.
And if you have somebody who's kind of in that industry and understands it, I mean, they can say, "Hey, listen,
I live and breathe it. I live and breathe.
Did you see this? Did you see this change? Did you see that change?"
I have other childcare centers that call me all the time. What do you think about this? What do you think about that? That's what happens when you're on the older spectrum, as you know.
I certainly do. And like we have people like Marianne Shalcroft-Smith, who we know very well.
Me too.
And she'll say, "Well, what do you think of this? And what do you think of that?"
Absolutely.
And she's a state representative.
Yeah.
And I know that she's very protective of small business. And for those little things, we're very, very grateful for.
Yeah, absolutely. So that's a great benefit. Let's talk a little bit about the application process. So what does that look like? Timelines, all of that, maybe so people have an idea of.
So remember, it's not our application.
I know.
It's the bank's application.
I know.
It's the CDC's application. And the little idiosyncrasies of you need to have your paperwork together.
Yep.
You need to have a business plan.
Always.
You need to have financial statements.
Yep.
You need to have projections. You need to understand that is the building that I'm going into on the state historic preservation list. And listen, I'm on the state historic preservation list because anything that's over 50 years technically is under historic preservation.
Me too. I'm in antique too.
But we encourage people to look that up first.
Yeah.
And let's just say you are in historic preservation, to start that paperwork up front as you're starting, as the bank is looking at the financing.
Yeah.
But the bank is going to make that decision. Mm-hmm. It's their application. It's their write-up. They submit it to the SBA saying, we believe in this business. We believe that this will repay. We want a 75% or a 50% guarantee on this particular loan. So it's really their process. And
so to make it, so that's kind of what makes it a little bit longer, because at a bank, if it's just a bank, they're just looking at it either approved or denied. So when they involve the SBA, then it's that second layer where they look at it and then they talk to you about it.
It depends.
Okay.
Because if it's a 7A loan and the bank has what we call preferred lender status, they can automatically do the loan.
Okay.
And we just give them a loan number.
Okay.
So, and then they have to do reporting to us. But if if that's already part of their process, that's fine. The 504 loans are a little bit different because they must be sent to Sacramento
Okay.
for review.
Okay.
And that's environmental reviews.
Sure.
I mean, because we're selling the debenture. So the SBA is actually taking a risk in that particular business. We understand what it is. And I have to tell you, Erica, I've not seen loans denied because the banks and the CDCs know how to put them together. And if you're dealing with a bank that does not have preferred lending status, and by the way, our CDCs have preferred lending status too, so it makes it a lot easier. But if you're dealing with a bank that doesn't have preferred lending status and they have to submit it to the Sacramento Loan Processing Center, it's not very timely. If all of the information is there, that's the key.
Yeah.
Is sending a complete package. And work with your lender to do that.
So, and I found that during the pandemic, as the different programs came available, I found that if you had all your stuff together, that turnaround was very quick as well. Which,
True.
right. So when I watched on the news and people were like, oh, I couldn't get a PPP loan the first round, I was like, did you have your stuff together? Because I applied and I got it, I don't want to say instantly, but I was like one of the first people to get it, but I had all my stuff. I was like, here, we work with Bank RI. I'm like, here's this, here's that, here's this, here's that. Filled out my form and it was very quick and seamless. So I think you always should have your stuff together. So that way, when emergencies happen, you are prepared and your business doesn't have any more stress than it needs to.
So interesting that you raise pandemic and PPP, and I'll raise EIDL and shuttered venue operating grants and EIDL grants and restaurant revitalization funds. So in this small state of Rhode Island, we put on the street $4.1 billion.
I believe it.
There was a lot, and I will also say we are dealing with fraud. We deal with fraud every day of the week.
Yep.
But there are a lot of people that got money that they absolutely needed, particularly in your industry, in the restaurant industry. Excuse me. There are people who were very conscientious, making sure that they were paying their employees, that they were keeping them on the payroll, and they were doing everything that they had to do in order to be successful. And we came through that. Some were more difficult than others, but the lenders in this state, particularly regional lenders, credit unions, were very responsive to the small business community. And I think that that's really why we are in so much better shape. We work with Liz Tanner, Secretary of Commerce, who I've known for a very long time, wonderful woman, and she was at the Department of Business Regulation at the time. We worked with Commerce RI, Bill Ash, who's currently the acting president of Commerce RI, but he's always headed up the loan programs. And when we saw gaps, we had the ability, because of our long-standing relationship, saying, hey, listen, this is what we're looking at. If you can help them here, we'll get the banks to do this. So, but I think we came through really well. And like I said, the technical assistance during that period was second to none. Yeah,
I agree. So before we wrap it up, if you could maybe give 2 or 3, or as many as you want, but 2 or 3 of your best tips to somebody who's ready to start a business in Rhode Island, what would they be?
My best recommendations is be committed to whatever business you're going to start. Do not go alone. Always look for those individuals, and there are plenty of people to help you get to where you need to be. Make sure that the paperwork and make sure that everything that you're submitting is accurate. Commit yourself to being a good business owner, because it's really important for you to be involved in that business. And don't put aside the fact that you may want to have a partner as you move forward. And I mean, these are just things, Erica, that I have seen over my years. I've been with the agency since, as I told you, since 1989. Came back to Rhode Island in 1991, and I've seen just about everything. And by the way, I have multiple years, not only as mayor of East Providence, but also at Department of the Interior and EPA, and I spent 11 years in Washington. So if I take all of my experiences and just say, okay, don't go it alone.
Yeah.
There are plenty of people
I
to help
agree.
you.
My sister and I run our business together, and there are times I'm like, tag, you're it, I'm taking a week off, right? But you do need to make sure you take care of yourself as a business owner.
Right.
You're a human being. And so having a partner helps make decisions. It helps when you need to step away for a minute or two. We all have families, kids get sick, all of those things.
And I think the most important thing is when you're in over your head and you think everything is crashing around you, ask for help.
Yeah.
Because there's somebody out there
Yeah.
who's gone through the exact same thing
Yeah.
and are willing to help you.
That's wof working with a coach or a mentor or, like you said, a
Absolutely.
business development place or a CWE, which I love. I was a graduate of. All of those things are really great resources. So thank you so much for your time today.
Appreciate it.
If you love this episode, please hit the subscribe button right up top, leave a comment below, and check us out next week. Thank you for tuning in to Practical Biz Podcast, Rhode Island's fastest growing business podcast. See you later. Are you a
Bye.
business owner? Are ready to get your startup? Well, started. Have a burning question you would like us to answer? Want to know more about the services we offer? Or register for upcoming workshops and events? Looking to book a guest speaker? Or would like to be a guest on the Practical Biz Podcast? Visit our website at stellabusinessconcepts.com.